Snipers, you have to see what's happening with the Bitcoin price this Tuesday. This is an emergency update with Bitcoin breaching above an extremely important price level at 17,200. As I record this video, Bitcoin at 17,400. This is a very important time for Bitcoin because now we have opened up the door to potentially see Bitcoin open up some upside targets, potentially towards the $25,000 level. I want to dive straight into the chart, Snipers, because there's something very interesting here that I'm noticing with Bitcoin inside of this falling wedge. Notice how we have this 200-day moving average slightly showing confluence with this market structural resistance level, but more importantly, when we look at the 200-day moving average on the S&P 500, notice how it's acting as clear resistance, and we are slowly approaching this resistance level right now. And so the 20-week moving average has so far been our guide throughout this bear market of whether or not we are starting to see any bullish momentum, but the S&P 500 is above its 20-week moving average. And so I decided to look at the 200-day moving average, and I think we're getting a lot more hints from the 200-day moving average. Being the fact that the SPY is above the 20-week moving average, we could assume that the markets are flipping bullish, but in reality, this 200-day moving average is really what's been holding down the equity markets. And of course, even if we look at Bitcoin, notice how that 200-day moving average so far, we've yet to even come test it, but we're slowly approaching this resistance level. And what's most interesting about this 200-day moving average, Snipers, is it's currently sitting at 19,700, which is also where Bitcoin's realized price is and the 2018 previous all-time high. So we know this is a very important level. This is the area of interest that I'm currently monitoring for Bitcoin. I think being above 17,200 certainly opens up the door for Bitcoin to come test the 200-day moving average right now. And we really want to see this daily candle today close fully above 17,200. And that's going to be one of the strongest confirmations of this potential move to the upside for Bitcoin to test this 200-day moving average. What's very interesting about the 200-day moving average, which is why the main topic of this video today is the 200-day moving average, is we can look at all of the four-dimensional revolving parts and notice how the 200-day moving average is extremely significant. Even here with the DXY, we actually fell below the 200-day moving average. And so a lot of people have been saying that the US dollar has been strengthening, and that's typically the narrative that you'll see on the mass media. But in reality, over the last 6 months, the US dollar has actually been weakening. As a matter of fact, notice how we have this bull market support level that we actually just breached below slightly. And that's why I think right now, because the DXY is below the 200-day moving average and testing a major bull market support level, there is a very high chance that the DXY has potentially topped out. And that doesn't mean we're not going to see another short-term move to the upside like Bitcoin did in its topping out phase, where it double topped, forming a higher high. On futures exchanges, it formed a lower high. GBTC formed a lower high. And so what we could expect with the DXY is there is that potential we could form a lower high or higher high. But for the most part, we've already seen the move for the DXY inside of this parabolic uptrend that it's been in, and that at this point, it's starting to slow down. So I think that what is extremely important here for the DXY in the immediate short to medium term is whether it's going to stay below its 200-day moving average or not, because if it gets above the 200-day moving average, that's where we have to get a little bit more careful with Bitcoin's potential upside and even the equity markets, because that lower high or that higher high for the DXY could potentially create new lows. And so it doesn't necessarily mean it has to happen in the immediate short term, but let's say the DXY does stay below the 200-day moving average for a prolonged amount of time, maybe even breaches this bull market support level, then that could actually assume the DXY has some further downside, and that Bitcoin has that potential, as we talked about in our video yesterday, to potentially see a relief rally before we see any further downside. And that would certainly prolong this bear market. But what if we do reach that $24,300 level? That's an extremely important resistance. And the door is currently open to that resistance level. Of course, we need to get above that 200-day moving average first. But let's say Bitcoin does get to that $25,000 level. At that point, we could either continue sideways, maybe come test 30,000 before we see any further lows for Bitcoin. And that's for those assuming that Bitcoin will form another low, potentially to fill the last CME gap at 9,665 or something in that nature. And so I think that the 200-day moving average is the most interesting indicator that we could potentially look at right now. You can see Ethereum, and not inside of a falling wedge, but inside of this rising wedge. We can even consider this symmetrical triangle, but also below the 200-day moving average, which has rejected Ethereum in the past. So that's currently sitting right around 1400, showing confluence with the 2018 previous all-time high at 1440. I'd be interested to see what the realized price for Ethereum is right now, because what if it's also sitting around 1440, just like Bitcoin's realized price is currently sitting at its 2018 previous all-time high. And so the Ethereum to Bitcoin chart is also a puzzle piece I want to talk about today, because it's inside of the symmetrical triangle testing a resistance level. And we cannot sit here and say that the Ethereum to Bitcoin pairing is bearish when it's above its 200-day moving average and above its 20-week moving average. And so it's actually following the S&P 500 a lot more similarly versus Bitcoin, which is below its 20-week moving average. And so Ethereum is actually showing strength, and it has been showing strength. The Ethereum to Bitcoin pairing has not been selling off. It's maintaining 74,000, 75,000 Satoshis, which is actually a pretty stout level for the Ethereum to Bitcoin pairing. And so I think that monitoring the Ethereum to Bitcoin chart, if we start to see momentum to the upside, and let's say 17,200 does flip into a support level, Bitcoin starts to make that move to 20,000, the Ethereum to Bitcoin chart could potentially even break out of the symmetrical triangle. And if that's the case, we could potentially see Ethereum outperform Bitcoin to the upside. And that actually doesn't sound like it's off the table with Bitcoin dominance falling below its 200-day moving average. It's clearly being shown on the charts right now that Bitcoin is showing weakness against Ethereum, especially with Bitcoin's dominance right now really being held down. We haven't seen Bitcoin dominance show any strength, and it's actually below the 200-day moving average, as I just mentioned. Now, what about the narrative of 2023, right? 2022 is such a bearish market, right? Bitcoin down over 70% for 2022. What about 2023? We have to look at what the charts are telling us, not what the mainstream is telling us. And what's very clear right now is that institutions are looking for a storage of value, with gold above its 200-day moving average for the start of this year. It's been crushing it. I think that that's a good narrative for Bitcoin to also potentially see some institutional liquidity flow into it, because despite what happened with FTX and what happened with Luna, what happened with Three Arrows Capital, at the end of the day, Bitcoin is still the top performing asset pre-COVID and has been the best inflation hedge in these markets versus equity markets especially. And so we'll continue to monitor that gold chart, but the 200-day moving average, very interesting to see how it's been acting as a resistance for most of these assets, which is why I didn't want to have the 20-week moving average on the chart as we usually do. Bitcoin against SPY inside of an ascending triangle, I think this is also something we should watch. We could potentially see a move to the upside where Bitcoin outperforms S&P 500. That is something that we'll continue to update you guys on. And look at this, China's traditional markets. This is the last thing I want to show you with the 200-day moving average. Also hasn't crossed above its 200-day moving average, despite headlines saying that China has been showing strength at the start of this year. The equity markets are still below the 200-day moving average. It's currently testing it as we record this video. So that's why I had to get this new format out to you guys as soon as possible. This isn't going to be the final format for these new type of video snipers. However, for now, this is just one step towards some new content for you guys. I do have another studio being set up right now. This is kind of a to-go studio that I just kind of put together today. I hope you enjoy this content. Smash the like button for the YouTube algorithm if you like this new type of content. And I just reapplied for monetization for our YouTube channel, so we probably won't be shadow banned any further as long as YouTube accepts that request. We just had a couple of issues with our shorts that we had to fix, removing some content from our channel, and now we'll have some original content from our shorts, which will help the algorithm and hopefully grow the channel. Very confident that we have some of the best analysis on the internet. And with that, snipers, I think that's all I want to talk about in this video. The 200-day moving average, very interesting. It's been holding Bitcoin down. It's been holding the equity markets down. We haven't crossed above it yet. The equity markets have been showing strength for the start of this year, but we don't have that full confirmation yet. And so Bitcoin right now, the most important level, 17,200 and 24,300. That's the range that we're in when we're above 17,200. 17,200 is the lower part of this range. So you could still assume that with Bitcoin around 17,200, it is actually a very attractive asset right now in terms of price because it's at the lower end of its range. And 17,200 could certainly act as a very strong support level in the next few weeks. We have to hold above 17,200. This is still all within the last 24 hours. And so let's continue to monitor the chart, snipers. When it comes to candle symmetry, I'd be interested to look at what we've got here. Yesterday, we didn't have such a nice daily candle, but what I really like is all of these green candle streaks that we've had over the last few days. There are only 2 red candles out of 10 total candles. And so 8 green candles, 2 red candles over the last 2 weeks, sort of. That to me looks quite well. I think that at any point we could be seeing another rush of liquidity. We haven't yet seen institutional volume on the 6-hour chart. I am monitoring that for you guys. And with that, thank you all for tuning into the Snipers channel this Tuesday. Let's see what happens with Bitcoin. 17,200 is the most important level right now. We want to hold that as support, and being above 17,200, the most likely scenario at that point is for Bitcoin to come test 20,000 US dollars, where we have so much confluence there with the 200-day moving average, the resistance level, as well as the realized price. And with that, I will see you guys next time, snipers.